Hey, what's going on, y'all? In this section, I just want to really quick go over how I personally journal my trades, okay? And this starts off all in TradingView first. So let me actually close that window in the back real quick so it's more cleaner for y'all. In TradingView, you guys should know by now how to use the position tool, obviously, right? Your long and short. That's what I use personally to show my trades on my chart, as well as the risk reward that the trade had. So instead of having to show all this, I just have a little text thing that shows my risk reward. I have these set as templates, so it changes to whatever risk reward on that trade was. And then of course you have your structure marking marked out, right? Once you have all your markings marked out in your TradingView, what you want to do is you want to highlight all the markings holding control. You want to go to the right side where it says object tree, and then you want to click on create a group of drawings right here. What this does is it groups all your drawings in one group, so you're able to now toggle them on and off in terms of visibility with one click of a button. So instead of having to manually select all of them, you can do this, and what you can do is just hide and show them like this way. And you can also delete as well if you want to delete multiple drawings at once. So it's a very helpful resource and tool in TradingView that majority traders do not know about, and that's why I'm sharing it with all of you guys, right? And usually for me, the thing I find this most helpful with is typically just for deleting drawings. Why? Because majority of times when you get around 1,000 drawings, for me at least on my TradingView, I start lagging when I move around my TradingView. So to prevent that from happening, I like to group my drawings in groups, so then I hide it when I don't need it, right? So all this marking is from the previous day. I don't need this marking for Asia session right now, right? You can see I had this market break structure actually earlier, and that was my draw on liquidity, and we just took it, right? But later you can see we tapped into flip, we failed to flip, and then we tapped into an PY that was lower, and then you had entry confirmation and you could target that. But anyway, let's not get into that real quick. I get distracted. Essentially, that's what I really typically do. So you hide it when you're done with the trading day, for example, and your charts are clean again with less lag, essentially. So now what I want to do is show you guys, once you have all your markings, your position tool, risk reward and everything, you want to go on the top right, and then you see where it says copy link. You want to click on that. What this does is it creates a specific custom TradingView link that you can share with others, but mainly for yourself in your trading journal. And this helps you keep your trading journal very clean instead of having it messy with all these images everywhere, because these images are huge, right? So you can also download and copy the image to your computer, but I prefer using a link, and I'll show you guys later why using a link is so crucial and why I prefer it, okay? So once you have that copy link, you then can go to your trading journal. So I'm gonna transition real quick now to my trading journal. So give me a moment. Okay, so you guys should see my trading journal here. This is my trading journal, okay? And essentially here is where I collect all my data, live trading data, and I journal all my trades. And like I said, I already have back tested 4,000 trades of data collection on my strategy that I teach you guys. So I already know my system is profitable, right? The only reason for me to continue journaling my live trades isn't to prove that my strategy works, because you have to prove that your strategy works from back testing first. Do not jump in the live market without doing enough back testing first on your strategy and edge. Once you have done that back testing, done that work ahead of time, back testing is a tool I use to validify strategies, to make sure they are valid and give enough room for error in terms of emotional mistakes, because you will make emotional mistakes at some point while live trading. So once you have that, I then start to live trade or forward test, right? I've been past that stage a long time ago, but I'm just showing you guys an example of how you can attempt trading if you're starting either brand new or new to the strategy and system and how you read price, how I teach you guys, right? So this is my basic trading journal. And for me, live trading and trading journal is mainly used to optimize my trading system. So what does that mean? That means essentially to find little subtle things that could help me improve my win rate or risk reward, because those are typically the two most important factors of profitability in terms of how much money you will make. Okay, or how much return is probably a better word of that you will make. So I like to keep track of all this data. You guys can see all the columns, all this data in every single column is stuff that I like to keep track of in my training journal. And then what you do is after a good amount of trades or a large enough sample size, you then want to go back to your journal. And this is where you can first understand that we're trading off data here. But the main thing is looking at your journal and seeing if you can find any similarity between your losses that you can prevent in the near future, as well as finding things also that you did good that you can capitalize more on. Maybe this setup you found has a 80% win rate, and maybe you want to double your risk on that setup compared to the other setups that are 50% win rates, right? Which is something you could do. For me personally, I don't dynamically adjust my risk management system. I keep it constant regardless in drawdown or if I'm in profit, right? But one thing to note is you should never increase your risk per trade if you're in drawdown. You should only be decreasing if you really wanted to. But me, I keep it consistent because I know my system and data, and I don't find myself in drawdown too often because of how my system performs, right? So that is essentially that part of the trading, okay? And this journal, by the way, you guys can find this from Don Vo on YouTube. Shout out Don Vo. He's a pretty big trading YouTuber, okay? And you just go on his website and sign up for an account, and you should have a link to create your own copy of the free trading journal. But aside from that, what you want to do is I just go and set up, and I just do the template. I put in the pairs of trade, the sessions, starting balance. I don't care about that much. It's just default set to 100K. Time frames, okay? Setup type, which is what your setup is that you're using. Years, that's common sense. And then additional metrics here, which I renamed, where you can keep track of certain metrics and see how well your different time frame POIs work out, as well as I recently added liquidity sweeps. Okay. And then for this, you want to select not at all, because break-even trade should not be considered a win. That doesn't make any sense. It should also not be considered a loss, because that also makes no sense. So it should be set at not at all. Then the next thing is you want to go to stats. This is overall where you add your own customization, but this is my stats so far for the past roughly 30-ish days of day trading. Okay, about 162 RR achieved, 81 wins, 43 losses, and 20 break-even trades here. And it cleanly organizes all your data in Excel like this, where you can cleanly see which setups perform best, as well as the additional metrics of what you should focus on more and entry time frames. And you can use this data to either filter out bad trades or just review it, seeing if you want to capitalize on certain times. So for example, I noticed my New York session and Asia session roughly have the same win rate. So there's nothing wrong with me trading Asia session. It's just I know from experience Asia session tends to not have the best market conditions. That is why obviously I'm taking a lot less trades during Asia session, and that's always why I don't like to focus on Asia session as much, because it's sometimes a waste of time if you're just looking for a setup, and it's even worse and counterproductive if you're trying to force a setup in bad market conditions. And London session, I barely ever trade. 3 trades is not enough data for this win rate, so that doesn't really matter to me. And then playbook is obviously where you include your setups defined, okay? You guys can define that yourself if you want. And then you guys can see if you change your setting here, you can specify which asset, how well you're doing, and this is the year range. But so far, doing pretty good for me. 162% gain past 30-ish days trading. I think it's about I think it's a little bit more than 30. I think it's like 5 or 6 weeks now. But yeah. This is when I recently transitioned to this trading journal. I used to use a different trading journal. If you guys aren't aware of, it's called TradeZella. You have to pay for it. I think it's like $40, $50 a month. And I had a yearly subscription with them. But after that yearly subscription ended, I just stopped using them just because I found this format to be a lot more simpler and easier to the eye to see your data, right? It also reinforces your brain to think more when you're journaling your trades, and helps with discipline. Why? Because TradeZella usually is automatically importing trades from your broker, right? So you just have to attach a file, like your broker statement from your file. But for this, you have to manually select all these things, and this helps reinforce your brain to understand that we're trading off data, not emotions, as well as reinforce your brain to be more comfortable with all your setups, right? And understand that losses are normal as well. This has helped those that did not do enough backtesting, honestly, to develop that probability-based mindset that I keep on preaching, because it is crucial to develop that kind of mindset when it comes to trading. Otherwise, if you're just trading based on numbers on the screen with no data, then I would say you're a gambler. If you don't have data backing up what you're doing, you're just gambling. That's my personal opinion. And yeah, I think that's how a lot of pro traders also view as well, because this is like a business. You have to collect data, and in order to do that, you have to put in the work. So these are all my trades, essentially, for this time period. Okay. And these are the columns I have. I have the date. I have a column. You guys can feel free to make your own columns. You right click, insert one column left to right. You can even just take like a beginner Excel tutorial on YouTube if you want to understand more about Excel, as well as the formulas on Excel, because I added some of my own formulas on here. Like for example, this takes the median of the M column, which is my trade duration. So my average trade duration is around 30 minutes, and it's typically lower, a little bit lower, like 20 minutes, because I had some 5-minute or a lot of 5-minute algo setups that I was taking for a while. So those obviously will last, you can see time-wise, way longer, 5 times the length typically of my 1-minute entry setups, which is what I mainly trade. My algo, it performs solid, but you have to do your own discretionary experience filtering. It's not something that's automatic. It's something I still have to manually trade, and that is why I'm preaching you guys how to read price action, because you will perform better than the algo. Okay, the algo does not outperform anywhere close to how you perform from experience in manual trading. Okay, I'll tell you guys that for a fact. The algo is around 71% win rate with a 1-to-1 risk to reward. That is about an expectancy value of 40 last time I checked. And if you're trading based on what I'm teaching you guys, you can get around these win rates. So for example, these setups around 50 to 60% win rate is pretty good for what I'm teaching you guys. And then your risk reward is typically 4 or 3 at least. So with that, your expectancy is typically around 100. So you're basically I'm double outperforming my algo, right? And my algo, the only reason why I stopped trading it for a bit is because I have more time now. So might as well mainly trade, right? As well as essentially, I just did not prefer holding for this long. The algo performed best on the 5-minute. That's why I use the 5-minute. And I just don't like holding trades for this long, right? This is way too long for me personally. So this is another thing you want to keep track of, which is trade duration, to see what time frames you personally like to enter off of and doing some filtering off of that. But you guys can see every other column is pretty self-explanatory for this session. Pair, setup, type, which is typically my entry model, buy or sell, entry time frame. I just have 2 entry time frames. I never enter off like anything higher than 5 minutes, mostly 1 minute. POI time frame, this is POI you're using. For me, POI time frame also include liquidity sweeps now, so I can keep track of how those are doing, which those are doing pretty good. 69% win rate compared to my 1M POIs, which hold about a 50% win rate with confirmation. Internal and external trend, this is extremely important. I used to have 1 column, but now I separate into 2. So I separate between a 1-minute structure versus a 5 and 15-minute structure, because as I teach you guys, there's external and internal in every single time frame. The market is fractal, right? So keeping track of these 2 columns and having them separated is very important to me. To potentially, this could be a way to filtering out your trades, right? Maybe you don't want to take trades. Maybe you notice that if you have a counter internal and counter external, that you should just completely not take those trades because they end more than oftentimes in a loss. So that's an example of how you can filter out your trades. Or maybe you find certain POI timeframes work very bad and you just want to filter those out. You could do that as well. POI type is either a flip, origin, or inducement. Okay, what that means is either price taps into a flip. For me personally, some people get confused about flip zones. So I could say you can consider a flip also known as an indecisional, which means it it is just a zone or POI that is not the extreme zone. The only reason why I named it flip is because it's a lot more mechanically defined, right? It caused an internal break structure, or it's aligned with previous supply or demand that broke and flipped in terms of market dynamics. But just make sure that if you're gonna call it an indecisional or taking those type of POIs, to make sure that there are valid zones still, because and cause something in the market, right? So typically you shouldn't run into that problem, but that's what you can also name as well. You just want to make sure everything makes sense to your brain personally. You don't have to name all the concepts exactly the same I name it. It's just, this is just how I learned and how my brain views things. Because your brain is essentially your edge in trading, okay? Trade duration, you guys already know that. TradingView screenshot, this is where I said from previously, you copy and paste your link from TradingView into here. And what essentially you do is you click on this link and it directs you to the screenshot of the TradingView. So you guys can test out if you want. You can just copy and paste in your browser and you will see that directs you directly to TradingView, where you will see the chart, and it's a lot cleaner than imagine if I had like a whole, just imagine if I had like a whole screenshot of a whole image here on here. It'll be very bad, right? And also when you have a screenshot of the whole image, the image is probably gonna be very small, right? Because of how this view is built in. So I prefer clearly to have a link. It's also much easier to see the whole entire chart as well, because once you open a link, it sends you directly to a huge chart where you can check out. So that's what I have there for TradingView screenshot. RR secured, common sense. This is basically how much risk reward you had on trades. If you're taking partials and that's part of your trading system, this is going to be kind of hard because you have to mainly essentially do math, and you have to calculate the percentage of your position that you partialed at what R. And that's why I prefer also to have a strict R target in terms of I have one TP. I don't do partials just because I found partials based on my data collection that partials over long run, I'm missing out on a lot more profits because my targets are very precise and accurate that I teach you guys. And majority of times the market goes there if you're in a winning right proper trade. So you might as well maximize and hold your whole entire position to that target, as long as the target is a realistic target and not something absurd, obviously, like 100 risk reward. So for me, I can show you guys some things here real quick. In this column, I created this formula. You have to change these column letters to match the column, because for example, P7 for you might be L7. Okay, all depends on how many columns you added, but you want to add in this formula. I already did the coding for you guys, so add in this formula. What it essentially does is, for example, if I do -2, it turns the column immediately to an L, and it just keeps everything a lot more clean, right? Not only that, but also makes a lot of things a lot easier. You don't have to manually type in W or L in your columns. It is just automated for you. For example, if I type in 5 risk reward here, it will be a W, right? That's all the formula does. It just calculates whether it's break even, negative, or positive. If it's 0, it's negative. You guys can see. Next column here is break-even trade management. This is only applicable to break-even trades. Okay. And in fact, I don't think this should be here. Hold on, give me a second. Yeah, I think this should not be here. I don't think it calculated that. Let's see. Yeah. I might have just put that in just now. I have no clue. But anyway, break-even trade management. This is something that I like to collect to see if my break-even system that I'm currently using, which is typically on internal structure breaks. You guys can also use the 50% rule, but I use internal structure breaks, and essentially I keep track to see whether or not my break-even was good. If it was a good break-even, it prevented a potential loss. If it was a bad break-even, I don't consider it a bad break-even, but I just call it bad break-even because it later ran to TP after I hit break-even. So I just named that a bad break-even. And the next thing is, I added this recently, did I catch majority of the move? Which I could define. You want to define things as specific as possible when you're trading. And it's greater than or equal to 75% of the trade before it hits break even, obviously, because you're not holding for 100 R. And essentially it's just a checkbox column that I like to check and to see and keep track of which trades I'm holding to the most potential profit, because we also want to maximize our winning trades to get the most risk reward out of the trades. And that's where you can also add in your own comments, okay, on how you manage your trade, as well as if you caught the majority trade or how far the trade ran. In terms of drawdown, you can also keep note of that. There's so many things to keep note of under comments. This is where you can basically refine your trading system here. Okay, I didn't have any of these checked for the algo because the algo is just targeting one-to-one static risk reward, so it doesn't matter. Target, origin, flip, week high, week low, inducement. You guys know what that is. Origin and flips are our internal POIs or internal liquidity. Week high and week lows are external liquidity. Okay, swing points and inducement. The reason why I wrote weak high and low is because I'm not targeting strong high and strong lows. That makes no sense. From what I teach you guys should know that weak highs and lows are liquidity targets, and strong highs and lows are typically held. So if you're marking them right on your chart, you should only be targeting weak highs and lows if there is one. But if there isn't, or you're unsure, target the origin or flip. I keep track of this data. You guys can see recently I've been targeting a lot of the weak highs and lows because a lot of my recent trades have been tons of continuations. And continuations, you will have this. If you're in a range, you will most likely target the flip or origin. They're pretty close typically to each other. And if a structure is creating like an inducement model, you would target inducement. For example, if you're trying to take a counter trade typically, to take out the inducement before continuing in that pro trend, right? So majority of times I rarely target inducement just because I found I don't typically like to take reversal trades. If price is continuing in one direction, I like to wait for the origin to get tapped and trade pro trend. Here are the comments, last but not least. Okay, pretty self-explanatory. You can copy this formula here. This is the amount secured, initial balance here, formula here, and then account balance formula right here. Okay, this is what I basically had to add myself. This did not come included before in the free journal. Just had to add some of this stuff for myself to calculate this. What it does is if I do risk percent per trade here, 5%, will change all numbers, right? So from if I had a 100K account, I would be growing it to 910K by now. So almost $1 million in roughly 6 weeks. But I'm never risking that much percent, and I just keep it at 100K because that is the default. But feel free to adjust this to whether you're taking a challenge account, funded, personal. Feel free to adjust that. I don't really look at these columns much. I just made it ahead of time in case for my students, if you guys find it helpful. So yeah, basically that also keeps track of all these numbers for you based on your risk reward here. So if you put 3 as a win, it will change to 3,000 profit, and it will auto adjust everything, which is very nice. So that's essentially it for the journal. There's nothing much else here. You just basically use this to keep yourself disciplined each and every single day. Keep track of your stats. Make sure you're focused on your trading, and whenever you're in drawdown, look back on this because you will understand that over a long period of time, your data plays out, right? As well, you can also add more columns like maybe market conditions, things like that, whatever you find helpful. But anyway, that's it for this video. Hope you guys did take a lot of notes and enjoy how I am journaling my trades. If you guys have any certain things you guys want to add in trading journal, feel free to. You can even share it with me as well if you want to see whether it's something valid to add to your trading journal or not. For me personally, at this point, I could probably remove the trade duration column because I already know based on my back test of so much data that it's roughly around 20-30 minutes. But aside from that, majority of the other columns I'll still keep just because I could potentially filter out trades and improve my trading from there. So there's only a certain point where you can improve your trading, right? Because you cannot be perfect, right? You can never have a 100% win rate, but we're always striving to optimize our trading as much as possible. That is improving your win rate, improving your risk reward, squeezing out the most profits you can. And yeah, that's basically it for this video. And I'll see you guys in the next one.